Hello, everyone. I'm Joe Schifano, Global Head of Regulatory Affairs at Eventus. Welcome to another episode of Eventus Quick Cuts, RegTech Trends in 2023. So we're here with Mike Castiglione, one of our company's directors of regulatory affairs. Welcome, Mike.
Hi, Joe. Good to see you.
Good to see you. So it's early in 2023. Let's talk a little bit about trends we're seeing in the RegTech world. Relative to the economy, it seems to me like we're in that cycle again, where the age-old saying that necessity is the mother of invention and progress will come out soon. Inflation and expected slower growth are feeding into business plans now. What effect is this having on RegTech in your view?
Yeah, financial institutions, like all firms, are making strategic plans and thinking about their budget in lieu of these new economic times, tougher economic times. So there's a natural tendency to look at costs and try to reduce costs. So on the surface, there's the sticker price for any service like RegTech software. And then after that, the more kind of advanced, deeper level analysis is looking at the costs to deploy and operate these technologies, and also the cost of future upgrades. That is, can you build upon it yourself? So that also is factoring in how firms think about RegTech. In addition, there's increasing labor costs. So we're hearing a lot from firms that they are looking to invest in technology that frees up their talent to do higher value tasks. So, it's cliche, but everyone wants to do more with less. The only way to do that is productivity gains, and productivity gains come from the right technology.
It makes a lot of sense. And then add to that the pressure of the regulatory environment. Obviously, last year we saw many examples of alleged financial frauds, poor risk management, issues with governance controls. And on top of all that, and necessarily so, regulators globally are promising more enforcement action. How is that feeding into business plans?
Yeah, so for pre-IPO companies, probably going to be even harder to raise money without strong compliance systems. So many VCs are promising stronger due diligence because many of them felt that they got burned in the last cycle, especially with crypto. So RegTech, in our view, is becoming business essential and growth essential. You'll need it to enter new markets, to get licenses, and you'll need it to raise money, to give confidence to your investors. So in this environment, having a battle-tested tech partner early in the journey is really essential. And for all firms, facing more financial enforcement globally. The stakes are just higher. Governments across the world are promising more investigations, more enforcement actions. And this is a historical trend. An economic downturn leads to more rules, more complex regulations. In response, businesses will have an incentive to adopt flexible and responsive technology that helps them deal with these more complex times. And then and then there's also a realization that if you have a legacy system that's doing the things that they've just done before, it's going to bog the business down.
Yeah, it's a tough message to hear, right? The combination of economic and regulatory headwinds. But I kind of remember post financial crisis 2008, 2009, 2010, when there was so much building. Many new businesses, many RegTech firms actually were born out of that crisis. Let's go somewhere maybe a little bit more happy and positive. What innovations, Mike, are we seeing here at Eventus relative to this RegTech trend that will be happening in 2023?
Yeah, there's a lot to be excited about. We at Eventus focus on trade surveillance, transaction monitoring, AML, and market risk. So a few advancements in those realms. One is cross-product, that is monitoring for trading irregularities on one financial instrument that affects another. There's a lot of focus on that in among clients and also regulators. Another tech advancement is really just improved data mastery and data analytics. So this includes bespoke queries, being able to run visualizations and analysis on top of what the software provides you, not just kind of accepting the analysis by default. And then also there's a lot to be done and a lot of advancements in blending machine learning with explainability. Regulators like explainability. And finally, multi-asset class. And this is basically crypto lending with traditional finance. So established institutions are putting assets on the blockchain. It's called tokenization. You'll hear this a lot. And then crypto markets, with all of its issues, the problems that we're seeing in crypto markets mirror what we've seen in traditional asset classes. So RegTech, any software that's helping you, deal with all this complexity, has to be able to address multi-asset classes, both sides, crypto and traditional assets.
That's great, Michael. That's all the time we have for today. Thanks for sharing your thoughts. To our viewers, thanks for joining us. You can read more about our take on global regulatory trends and RegTech on Eventus.com. Follow us on social media, or just please reach out to either of us directly, and we'd be happy to talk with you. Have a nice day.